Okay, well, we're going to begin and get started. Please let me know if you can see my screen. It should say Beginners Boot Camp. If you can, let me know.
Yes, I can see it.
Okay, great, awesome, thank you. So, first off, welcome to the Fast Track Traders Boot Camp. I'm so glad that you're here. Um, my name is Margie, if you've never met me before. And at the end of this course, I am really hoping that you're going to have a basic understanding of what the stock market is and how to get started as a trader. So you should walk away today with clear instructions on setting up your trading station so that you can begin trading this upcoming week if you even desire. A few housekeeping matters. I will leave room for questions at the end, but don't worry, I'll make sure that I stay to answer all your questions. But if you have a burning question, don't hesitate to get my attention. Just let me know, put it in the chat box, or if you have to interrupt me where I'm not seeing it, then just definitely, come off of mute and let me know. If it's something that I will get to later in the presentation, I'll definitely let you know that. So this session is being recorded and you'll have access to the recording at the end. It is my policy, though, that you don't share this recording or materials with anyone else. Also, please check your emails. I sent out a series of emails over the last 7 days regarding this class, and it'll have important information in it for you to how you can set up various accounts, and they will actually build on what we're going to cover in today's lesson. If you didn't see those emails, please look in your spam folder or don't hesitate to reach out to me after class, and I can help you get caught up on that. All right, so without further ado, we're going to begin. Again, welcome. I'm so glad to have you here. If you've never met me before, my name is Margie. I'm a day trader and a swing trader, and I'm also an investor. And I'll be explaining to you more about what that means as we continue on in the lesson. So I've been trading a little under or almost 5 years now. And the reason I started trading is because I wanted to gain independence and freedom. And if you remind me, I'll definitely share my exact story about why I began trading a little later in the presentation. Now, I definitely want to help people understand the basics of the financial markets, and I want to empower people to take control of their financial destiny. So I'm so excited because your trading journey actually begins today. You're going to walk away with knowledge that's enough to make you dangerous. And so I don't want you to sleep on that, and I don't want you to question that. Here's what we're going to be covering today. We're going to be going over the foundations of trading, how you can make money in the stock market. We'll be talking about trading psychology, and how you can build consistent habits to become a profitable trader. We're going to talk about various assets or stocks that you can trade. And you're going to walk away with essential tools and resources that can help you along with your trading journey. And as promised, I'm going to tell you why trading is not a scam and how you can replace your 9-to-5 income. As a disclaimer, I am not a financial advisor. Trading is risky. Be prepared. You can lose all of your money. Do not risk anything that you're not willing. Do not risk any money that you're not willing to lose. I'm also not a tax advisor. So anything I say in this video or in this class, any of the materials that I hand out to you, any strategy that I give, it is not financial advice. You should seek out a financial advisor if for your specific financial needs, should you need one, okay? Now, I'm also an attorney, so some people may trust me because I'm a lawyer, but just know that this presentation has nothing to do with me as a lawyer, and you purchasing this class is not, an attorney-client relationship, okay? So let's get into the foundations of trading. So what is a trader? All right, so you probably heard that term, throw it around a lot. So a trader is nothing more than a person who's trying to get in and out of the market for the purpose of generating income. And I'm going to break that down for you in more simple terms, but you probably should screenshot this or go back after the class to actually go over this material again, because it's going to make sense the more you go over it. But just remember, a trader is someone that gets in and out of the market for the sole purpose of generating income. This is different than an investor. So when you become a trader, or you're signing up today to become a trader, just know that there is capital gain taxes for getting in and out of the market quickly. So when you're trading in your different accounts, you need to know that any wins that you generate throughout the year, you'll need to claim them on your taxes. And you'll also pay a specific bracket of taxes called capital gains, which can be more or in addition to what you're normally used to paying. So you definitely want to talk with your CPA or accountant or whoever handles your taxes. Now, on the flip side, if you incur trading losses, which everyone does, that can be, if you're not classified as a certain trader, you can get up to like $3,000 a year in deductions or compensation for those trades to help offset or balance your taxes. And again, you need to speak with your CPA or financial advisor. So sometimes there's a win-win situation. I've for trading, but I also seen where if you have more than $3,000 in losses within a year, where you can actually roll over those losses. Now, there's even more strategies for traders, but not enough time for me to get into it on this video. And again, you want to speak with your financial advisor. So again, trading, you're going to pay capital gains taxes if you're in a regular trading account. You're looking for short wins, okay? You're not looking to hold trades for a long period of time. You're not looking to enter trades today in hopes of you living off of it 10 years from now. That's not what a trader is looking for. You're looking for movements now in the market where you can get in and out, okay, to make some quick money. You also want to secure those profits so you can take care of any necessities and needs that you have today. So the key to remember is you're holding for a short period of time. Now, investing, on the other hand, is more about building wealth. And we've probably all heard about that in some form or another. So investing is more in the form of like your 401k plans, your pension plans, putting money in an IRA, or even real estate. So you can still enter the stock market, but you're doing it for the purpose of future planning. You generally hold for a long period of time and you're not looking for a quick gain. Okay, so you're not looking to make money off that asset. Now, does this make sense? Any questions about this so far, or we kind of all got that?
No, I understand that. We're good.
Oh, great, excellent. Thank you. Now, a big strategy of trading, now I know this might seem like, well, why is she going this simple? Because I'm telling you, these foundations are going to really help you understand trading. Like, they're going to build off of each other, and they're not things that you should skip. So you should understand who's in the market with you. Who is your competition? Okay. So either you're going to be an institutional trader or you're going to be a retail trader. Now, all types of people touch the stock market and we really don't know it, but colleges and universities go into the stock market to continue to generate income. So you may hear of things in the form of endowment funds, like big institutions, okay? Also, insurance agencies or companies, whenever you pay your premium, there's a large portion of your monthly premium for insurance companies where they take it and they put it in the stock market and reinvest it to continue to generate income for themselves. Okay. Pension plans. If you are a part of a state retirement plan, or if you have a 401k plan, that money goes into a pool and they have managers that's also out there in the financial market, that's in the stock market every day to generate and grow those funds. Also, investment firms, you probably heard of Goldman Sachs. That's another big one. And then hedge funds. So hedge funds is when like millionaire or billionaire friends get together, and maybe like three, four, or five of them, and they put their money all in a pot, like a couple of $1 million or more, and then they hire one person that could be like yourself, right? That's going to learn to trade the way we learn to trade today. And they will manage those funds and generate income for them. Now, they're going to be doing the same thing that I'm talking about today. Now, on the other side is me and you. Okay. So we're going to be called retail investors. Now, retail investors usually don't have enough money to move the market. What's going to be moving the market, and you'll be seeing price change and fluctuation of different stocks, is actually going to be the institutions. Okay. So, in order to become a successful trader, you have to determine or learn how to determine where the institutions are buying and selling, and you want to follow their move or their flow. Okay. And that's how you make money. You don't want to move against them. So let's break down the stock market. The stock market is nothing more than a place where buyers and sellers come together to purchase stock or sell stock. Okay. Now, stock exchanges are places where the companies, like public owned companies, will go and list their shares on the open market in exchange for me and you to go and purchase those shares. So you probably heard of things like the Dow, the NASDAQ, the S&P, okay? Those exchanges are where companies will go and list them, and you and I will go and buy them. Now, the Dow is made up of the top 30 companies that's traded in the United States. The NASDAQ is a tech giant. So if you're looking at buying or selling tech companies, you're going to want to pay attention to the NASDAQ. And then the S&P, which stands for Standard and Poor's, it's like the top 500 leading companies in the United States. And that is broken down into sectors. Okay. Those sectors include things like oil and gas, or we call them consumables, discretionary companies. That's going to be things like Walmart, Target, any type of your grocery stores. They're going to be sectors, and some people actually go to specific sectors within the S&P and just trade those sectors, how they move. Or you can trade the S&P in general. Or again, if you're looking for tech giants like Apple and Tesla, you want to pay attention to the NASDAQ. Okay. Now, you and I can't just go to the stock exchange and purchase individual shares of stock. So let's scroll back up. So the stock exchanges are where the companies will go and list their shares, but we are going to need a middleman to go and purchase those shares for us. Okay. The middleman is called a stockbroker. Stockbrokers, we've probably heard of them before. If you've heard of like Fidelity, Robinhood, Charles Schwab, what recently used to be TD Ameritrade, which was purchased out by Charles Schwab. Those are brokers. We would need to sign up for a brokerage account in order to purchase shares of a company. Okay. And that's one of the emails I sent out to you. So I gave you a full walkthrough of how to actually go in and set up a brokerage account. But what I want to do is talk to you a little bit about Charles Schwab. Okay, can you see Charles Schwab now on the page? Hopefully you can. Okay, so Charles Schwab, you said yes? Okay, great. So Charles Schwab is one of the leading brokers. Now, the reason why I actually prefer Charles Schwab is because they have a platform called ThinkorSwim. ThinkorSwim is one of the top platforms that option traders, and I'll explain what that is later, but what that option traders use to get in and out of the market. They used to be with TD Ameritrade, but Charles Schwab bought out TD Ameritrade. So I have no issue if you decide to go with Robinhood or any other brokerage, but for the purposes of this training, I'll be using Charles Schwab. And any other trainings that I do, I'll be using Charles Schwab because I want access to the TD Ameritrade platform. So I wanted to talk a little bit and go in detail, more detail than what I put in the video about the different types of accounts. So if you hover over here on the accounts and products page, you're going to see it says brokerage and trading. Well, there's also retirement accounts, educational accounts, and custodial accounts. You can do the trading that I'm teaching you today. You can do it in any of these accounts. You can request access to trade in these accounts and you can grow them. So if you're trying to set an educational or custodial account up for your child to prepare for college, you can open this account. If you want to trade in a retirement account like an IRA or Roth IRA or traditional IRA, whichever one, you can open up that type of brokerage account. Or the one I did in the video was the regular brokerage account. And again, that one comes with capital gains taxes. But if you put something in an IRA account, just know that if you grow the funds and you need to take something out, you're hitting up against those tax consequences. And there may be consequences for these other accounts. So you definitely want to talk with your tax advisor. Okay. Now, once you go through the video and you set up your account, if you look over here under trading, this will be the ThinkorSwim platform. You can tap there on the platform, and this is what you're looking for. And you can just log back in to download. Now, I don't download from my desktop. Okay. I'm looking for my mobile, and I also don't trade on the web. I'm looking to put this platform on my phone. Okay. So I do most of my trading from the phone and on the go. If any of that doesn't make sense, again, just stop me and let me know. So again, we just found out about the middleman, and we learned that stocks are listed on the exchange. Okay. So how do we actually find stocks listed on this exchange? They're listed and they're given a unique set of codes called ticker symbols. All right. Now, a free resource and tool that you can use to look up ticker symbols is Yahoo Finance. So if you go to yahoofinance.com, again, which is a free resource, if you come to this search bar, you can type in the name of any company that you're interested in trading. So I'm going to start with Walmart, for example. So I type in Walmart, and I can see here the first thing that pops up is WMT Walmart Inc. Now, for the United States, it's normally going to be the first thing that pops up. Okay. Anytime you start seeing dots and things like that, that's usually not something that we trade. So don't click on those. But if you click on the first one, you're going to see that it says Walmart Inc. It's going to give you the price of the stock. And here's where it closed at on Friday at closing bell. Now, this ticker symbol is something that all right. Now, this ticker symbol is something that you're going to want to remember. So if you want to trade Walmart, you can write it down and just remember it. If you're looking for another company, let's say Tesla, you're going to go back to the same search bar. And you're going to type in Tesla. And as you can see, the name comes up at the bottom. So this is going to be the ticker symbol. So again, you want to write this ticker symbol down. And that's how you can create a list of stocks that you want to watch or put on your watch list for trading. Okay, so those are ticker symbols, just the unique combination of letters that are used to identify a particular stock or asset. And we went over a few samples of ticker symbols and how to find them. So Whenever you find a ticker symbol that allows you to buy shares of a company. Now, this snapshot right here is a snapshot from inside of the TD Ameritrade platform. And I'll show you how to put in a ticker symbol in a few minutes and look for a trade. But I just want you to see this is what it's going to look like. This is Apple, like the Apple from the iPhone company. And this is the ticker symbol. It's going to tell you here the price. It's going to tell you if the stock moved up or down that day and how much. So Apple lost $1.56, okay? If you want to buy one individual share, you just click here. And another example is UNG, which is US Natural Gas. And we can see that it costs $14.32. And it went up 14 cents for the day. So I guess you're saying, Margie, like if a stock only moved, or first off, if you were in Apple yesterday, because this is from yesterday, you would have lost money, right? If you bought a share. So you're probably like, well, Margie, like how you make money? Like the stock went down. If I bought a share and it went down, then I lost money. And then you also probably like, Margie, this stock costs $14, but it only moved 14 cents. How am I going to live off that, right? Well, as traders, we actually use something called option contracts, okay? So we're able to control a basket of 100 shares, and we would have actually made $14.18 versus 14 cents. So I'm going to break down options for you, okay? Options are found on the Chicago Stock Exchange. Now, I went over the top exchanges that we're most likely used to hearing about, which is the New York Stock Exchange, which I didn't mention it, but the S&P, the NASDAQ, and the Dow, right? We all know those exchanges. And if you are buying individual shares of stock, that is a great way to approach the stock market. But if you're a trader, you need to go over, leave New York and go over to Chicago and learn about the Chicago Stock Exchange. The Chicago Stock Exchange does a lot of things, but one of the things it offers is a way for you to buy options, okay? So options is nothing more than a contract. You're not buying the actual shares, you're purchasing a contract to control 100 shares. And what you're going to take away is the ability to make money off the movement of those 100 shares. So you're going to say, I don't want to hold on to these shares. I'm not trying to invest. I'm not trying to build wealth at this point. I just want to borrow. You're just going to let me hold 100 shares of whatever company that you'll let me hold, that I want to hold, and I'm going to make money off its movement. Okay. So that's option contracts. Let's dive deep a little bit. Option contracts, the regular definition for it is the right to buy or sell a stock at a specific price by a specific date. One contract covers 100 shares. Okay.
Are we able to ask questions, or we have to wait to the end?
Sure. You can ask questions, but I believe go ahead. You want to ask them? Go ahead.
So I just wanted to get clarity around the 100, the contract. So if the contract, if the share price is $14.60, don't even concern yourself with that because you're buying 100 shares of the option contract. Is that the way that works?
Correct. So, and I'm going to break that down a little bit. I'm going to show you an option chain, and the price of the actual option chain is going to be different than the price of the actual share of the stock. Okay.
Gotcha.
So
Okay.
that's why they call options the poor man's way to make money, because I'll slide back up and give it to you a little early. So basically, the price of this is $14.32, right?
Yes.
In order to buy 100 of them, we would have to actually buy 100 of them. And I didn't go to school for math, So I'm
So
about to,
$1,400.
yes, you would
Yeah.
have to spend $1,400. I don't have in front of me, actually, I can look up the actual price of the contract. But for a stock that is $14.32, the a good contract that you could get into would have cost you 37 cents, would have been $37 to get in and control this.
Okay.
Okay. So the great thing about options is it's actually a lower entry to to make money, and
Mhm.
which is why traders actually use it, and it's called the poor man's way to make money. And I am going to explain that a little bit later. So, but I thank you for that question. Does that make sense? Can we move?
Makes perfect sense. No, that's cool.
Okay, great. All right. So now this is technical. I'm about to get into some parts that's going to be very boring and probably hard to understand. So I just encourage you to go back and listen to the video a couple of times, okay? And if you have any questions, definitely make sure that I can, I'm working through them, but it's definitely going to be boring. It's gonna be dull, but we're gonna get to some fun parts. All right. So if you're a visual person and you kind of like just need like, well, how does this move? All right. So you're going to have the right to purchase the underlying shares. So they're saying that, okay, there's 14 shares. I mean, sorry, there's 100 shares in the contract. And I'll give you the right to purchase those at the end of our option contract, but you don't have the obligation. You're not mandated. It's not mandatory that you actually buy these shares at the end of the contract. The contract just says for a specific period of time, right? So there's an expiration date. So a specific period of time, I'll let you borrow and I'll give you the right to sell or to buy these stocks up until the expiration date. And then there will be a reserve price. You're looking out in the future and saying, I only want to pay this amount for the contract. But honestly, that does not matter that much for traders. Okay. All right. So if I were you, I would screenshot this page or at least come back to it. It is the technical definitions of the inner workings of how option contracts work. All right. And I will break it down where this makes sense, but this is just all the jargons, okay? Now, in our earlier example, if you would have bought Apple and Apple went down, like if you just would have bought a share of Apple and it went down, you would have lost money for the day. But another reason why traders like to use option contracts and prefer to be on the Chicago Stock Exchange is because you can make money whether the stocks are going up or if they're going down. Okay. So we have a way of reading charts. And when we read charts and we think that the stock is about to go up, we purchase option contracts called calls. Okay. And those calls are betting that the stock market is going to go, or the stock or the ticker symbol that you're getting in is going to go up. And if we think that it's going to go down, we purchase option contracts called puts. Okay. And that way, if the stock is going down, we'll make money that way as well. All right. Now, the regular stock market has something called pre-market hours and extended market hours, right? So they open up at actually 4 or 4:30 a.m. Eastern Standard Time and goes all the way to 9:30 a.m. Eastern Standard Time. But the options market is only open from 9:30 a.m. to 4:00 p.m. And this sounds like the time of the day that most people are working, unless you're in the medical field or you're working second or third shift, right? So most of the time, if you're going to use trading as a side hustle, you can get in and out and be done the same time you're going home every day. Okay. Now, just because the market is open for these hours, it does not mean that you need to trade this entire time. There are peak seasons or peak points within the market that most traders use. Those times are the first 2 hours that the market opens and the last trading hour of the day. Okay, so that's going to be from 9:30 to about 11:30 a.m. or from about 3 to 4 p.m.
Well, what does it mean? What
Mhm.
does it mean when you say, is that when it's the most volatile, or that's when the most action is happening, and then
Correct.
things are going up and down? So that's when you're able to catch the blips going up or down. Is that what that means?
Correct. So that's the most volatile time or the most time that traders are usually in there to get their money. They don't waste time in the rest of the day. Okay. So
Hmm.
you said it perfectly. Now, even shorter than that, as you become seasoned as a trader, you'll probably find that you only need 20 to 30 minutes of those times. Okay. Mm-mm.
No, just period throughout the.
Period. Mhm. Yeah.
Am I messing up your recording by asking you these questions, or should I just write the questions and ask at the end?
No, just keep going. It's fine. I'm enjoying this. All right. So 3 must-have for trading options. Okay. In order to win at options, you need a way to enter and exit your trades. You need a way to watch what institutional traders are doing, and you need a personalized game plan for you. Okay. So number 1, how do we enter and exit trades? We use a trading or brokerage account. And again, we talked about that. We're going to use Charles Schwab, and we went to the website and we watched the video in your email on how to set up the brokerage account. So now this is what the app looks like. If you have an Apple, or they also have Android. So you just want to find this app, the ThinkorSwim app, and you want to download it. And since we're on this recording, you know what? We can just let me know, were you able to find it?
I'm actually doing it in real time as we're doing it right now.
Good. That's awesome. Now, if you haven't set up your Charles Schwab brokerage account yet, then you won't be able to sign on, but at least you'll have it downloaded. Okay. Once you get into the app, this is literally what it's going to look like when you sign in and open it. Now, you're going to have a different set of, these are ticker symbols with stocks that pop up because they're going to give you a like generic one, but you can create your own by hitting the edit button and typing in your ticker symbol, and it'll add to your watch list. Okay. But what we're going to do first is we're going to come over to this circle area. That's the search button. And then you're going to search, you're going to type that ticker symbol in that we found earlier that we want to search for the stock. Okay. As you can see, it'll also have a list of recently reviewed, and these are things I recently reviewed. Not a suggestion for you to buy, hold, or sell, but you can quickly access one from here if you want to.
Okay.
All right. So once you get into that stock, what's going to pull up is this full thing right here. This is what it's going to look like. So again, it's going to give you the ticker symbol at the top, the name of the company. It's going to tell you the price. It's going to tell you how much it moved. The first tab is going to be chart. So I don't chart in my app in my brokerage app. I'll show you that later. What I do, that was also in another email we chart in TradingView. It's a very robust platform. If you have any questions, again, in the email, I sent you a link for how you can sign up for easy access, but I chart there. But if you needed to just glance at the chart for any moment, you would hit that first tab. If you need to read on news about the stock, you would hit the second tab. But this third tab is where we go to find options. Okay?
I have a question.
Yes.
The Schwab account, the ThinkorSwim account, does it cost for the Schwab account and also for the, I guess, the other charting account?
It does not. It's free. There's Charles Schwab is free. And it will tell you when I walk you through in that video, it'll show you that it's a $0 minimum sign up and $0 account balance that's required.
Okay.
But you probably do need to at least fund the account so that you can be able to trade if you're going to start live trading, but you actually don't even have to start there. You can start trading in a simulated account, which I'll talk about. But simulated accounts are saying that I can just go in here and practice. I don't have to lose my hard-earned money to get this done. Okay. It's going to look.
My bet was right.
So it looks exactly the same. Now for TradingView, you have 30 days free. And after that, there is a free version. Okay. There may be delayed data. Okay. So that means
that
that
wouldn't be good, would it?
It will not be good. It will not be good. But here's the thing. If you can, I wouldn't suggest it, but Charles Schwab or TD Ameritrade probably shouldn't have delayed data. So if you're in the practice account or the simulated account, you just need to contact them and send them an email said, hey, how can I get updated data? You know, I want real-time data in my practice account. Now, when it was with TD Ameritrade, we used to have to at least deposit $500 into our account before they would give us live trading data. Of course, if you want to take it right back out, that's up to you, but they would at least require that minimum deposit. Now, I'm not sure that Charles Schwab has that same requirement. All right. So while we're on the screen, one little bonus I wanted to give you is that I don't know if you're like I was, but for many years, I always wondered, how can I actually purchase a share of a company? Like I knew I couldn't walk into Walmart and go to the cash register and request a share of a company, right? But I also didn't know how to do that. So if you at least got to this far in the video, in the presentation, is this button right here. If you set up your account and you hit that button right there, you can buy individual shares as an investor, like you're just buying the whole for a long period of time for retirement to give to your children or whatever else. Okay. So if you didn't know that, like I didn't know that, then there you go. All right. But what we're looking for is the options. Okay. Now, we talked earlier about the right options are the right, not the obligation to buy or sell up until a specific period of time. These are the periods of times. Okay. So options, when you purchase options, you're looking for a date that you want to allow your trade to move out. Okay. You want to buy yourself time. Now, the more time you buy, the more expensive it's going to be. But I'm going to show you how to read these option chains. Okay. All right. So this first number is going to be the day that the option expires. The second one, like it's not a number, but February, the month is going to be abbreviated. That's going to be the month that your option expires. 24 is the year. The number in parentheses is how many days until your option expires. There will always be 100 contracts, 100 shares in each contract, sorry. And then weekly just means that your expiration is actually expiring this Friday. Now, most options have a monthly expiration. So you'll see September 20th, October 18th. Options expire the third Friday of every month. But some stocks that are high in volume, which means that a lot of people are getting in and out of them, they may include weekly expirations. It's going to be important for you to keep up with when your your trade or your contract is expiring because you would have need to made your money, got in and got out before you get caught before that expiration date. Okay.
What's the consequence if you don't? If you don't either exit or either whatever, what is it called? If you don't buy or exit, then you lose the money altogether.
You can. So option contracts have other terms, or they're called Greeks. And one of the Greeks, you have the delta, the theta, and a couple of other ones. But the most important one when it comes to option expirations is something called the theta. Theta is a time decay. Okay. So basically, the amount that you pay for the option contract, as you get closer and closer to that expiration date, theta is going to eat up your contract. Okay. So they're going to just eat money and eat money and eat money.
But what
So
is what's eating the money though? Is it automatically going down in value?
it is
The contract or the actual stock itself?
the contract. The stock is going to be out there. The stock not going anywhere,
Okay.
but the contract is. The stock itself is on the New York, the NASDAQ, whatever stock exchange.
The
The
options
option contract is on the Chicago and it's losing value. It's the whole time balance. So a lot of traders lose money when they try to buy a lot of cheaper contracts. Okay. Contracts are extremely cheap because the expiration is when the expiration is closer.
Closer. Got it. Okay. Because obviously they're going down in value.
Correct. So when you buy yourself time, you may pay more money, but you also, that theta is more stable. So if there's swings or high ups and lows in the contract price where it's not going in your favor, it won't cause you to lose more money on the contract because you're having more time for it to play out. Okay. All right. Any question? Excuse me. Any questions about these?
What would make the, I guess, so the option going up or down and being able to catch that percentage point between, let's say, I don't know, by 14 cents or whatever, is there an announcement or some type of news or something that hits the streets that makes the stock go up or down that would make the value of the option more greater or less?
It can. So it just depends on where you are. Now, every day, so all stocks are a part of a stock exchange, right? So when I told you that NASDAQ mostly has tech companies, all right? NASDAQ itself has something called a seasonality. There's a time of the year when the NASDAQ just goes up, and there's a time of the year when the NASDAQ just goes down. Most of the time, if a company is a part of a major index, it's going to follow or be pushed in that trend.
Got it.
Does that make sense? So sometimes it does not have to have news around it. It's just what it's a part of.
Nature.
Right. You say, you tell me who you hang around and I'll show, and you tell me who you are, or I'll show you who you are. You know, show me who you hang around. Okay. So if something's hanging around a tech company and all the techs are going up, it's probably unless it came out unless it came out with some news. So individual companies can have drastic news that happen. Like Microsoft is a tech company, but I think it had a shortage a couple of weeks ago where all of Microsoft went down. Well, tech was going up, but Microsoft was tanking because they had this big outage.
Would that have been a good time to? I got excited because would that have been a good time to put in an option for Microsoft is going to continue to go down?
Possibly.
Possibly.
I would get in and out. I wouldn't ride it for a couple of days.
No, not ride it, but I mean like you're talking. Like
I mean that's news. That's one aspect of trading, and we'll get into that a little bit later. But you can be a news trader if that can be one of your strategies or approaches to the market. Let me find out what type of news catalyst is going to affect this stock or this index. Okay. All right. So news is one. Also, a company can come out with where it doesn't follow the trend of the overall market is when let's say a company fired their CEO Or
Right.
yeah. All
The
right. So
leadership change.
yeah, leadership change like that. That's not going to work. But sometimes, yeah, there can be things like that that affect the stock where it does something different, like different news catalysts. Okay, but I promise I'm gonna get into it.
Oh, I'm sorry.
No, you're fine. These are good questions. I'm enjoying it. Like I'm really enjoying it. So
Okay.
I appreciate that. Okay, so the strike price is a predetermined price at which the holder of an option has the right but not the obligation to buy or sell. So the strike price is also you at least I'm showing you here where you need to find it,
Okay.
but it's another strategy in how you're getting in and out of trades. Okay. So what I want you to do is when you see your strike price, I want you to scroll all the way down to find this line right here.
Okay.
Okay. This line is going to tell you where the price of the underlying asset is. So the price, let's say if this was Apple, this line is going to tell you that Apple is somewhere between $428 and $429, the price of Apple. That's what this line means. Okay. Now, this side of the line, I'm going to show you it a little later, but I just need to tell you this side is where we buy calls. Okay. On this side is where we buy puts.
Okay.
Okay. So on this side, calls mean we're calling up. The market is going up. We're putting down. The market is going down. Okay. But the reason why I want you to pay attention to this line is because I want to talk about strike prices. The quickest way, if you don't want to understand it fully, because I can teach it fully more, in one of my class, should you decide to, sign up for group coaching or mentorship or whatever, I can go into more detail about strike prices. But for the purposes, if you're saying, I just want to get started, you need to find this line that's the closest to the strike price, and you need to purchase option contracts that are at the closest to this line. Okay. Yes, they're going to be more expensive, but they are the safer contracts. This line, when you go to the blue, it's called in the money. See this blue shade? Anything here and back, anything here and back is in the money. Anything here and in the black is called out of the money. The further you go out of the money, the contract prices are cheaper, but they're only cheaper because the market says it'll never reach this price before the expiration date.
I got you.
Okay. It doesn't mean you can't make money off of it, but it means that you are really risking. Okay. All right.
Can you give me a contextual example of you even use this stock? So you would buy, so what would be, as an example, what would be like the contract's option price for if it's at $428 at the strike price, what would be like the average, I guess the options price close to the line?
So I'm gonna tell you.
Am I getting ahead of, if I'm getting ahead of myself?
No, I just need to break it down in 2 steps. The first step is if this option line is an expiration date that is close by, the nearest expiration. So let's say if this is expiring this upcoming week.
Okay.
And it's a stock that's probably about $200 to $300.
Okay.
Then this is probably the price at the line. And that's just a generalize of what I'm seeing.
Repeat that one more time. If the stock price is about $200 and on the stock,
between like $200 to $300.
okay.
And let me go back up. You're here. You're
Right.
expiring
I got that.
this week.
This week, right?
Then you'll probably see it there. You'll probably see where the price of the option at the line is around this point. Does that make sense? So let's take the same strike price, like 428 or 429, and then let's move to here, October.
A month out.
A month out. That
Right.
same strike price could be about $700-800.
Because it's so far out.
Correct. Does that make sense?
That's the strike price, but what would be the option? My question was,
This is the option price. This is the cost of the option. Now,
$3.98
times 100, because there's 100 shares.
Oh, so it'd be $398.
Yes,
Got
but
it.
that's what you have to put up. That's called the premium. That's what you need to put up in, they're going to hold it in an account for you. You're saying, I agree to pay $398 a share. So $398 per contract. And I'm going to put it in this pot. You're going to be the broker. You're going to be the middleman, Charles Schwab. You're going to hold it for me. In exchange, I get the right to control this. Now, as the stock moves, the price of this contract moves. So if Apple moves up if this stock moves up $1, the theta we talked about, which is the delta, because you're purchasing so close to this line, it should be 50 cents. So for every dollar, 50 cents, it should be about 50 cents.
Okay.
That's why you're purchasing close to the line. So for every dollar that the stock moves, your contract will move 50 cents. So you don't have to hold to the expiration date. You say, you know what? I like that this is no longer $3.98. It's $3.98 plus 50 cents, which will be $4 and some change. Right. Broker, get me out of this contract. Give me my money back. I get to keep my $3.98 plus the 50 cents, and 50 cents on every share will mean that I made $50.
Got it.
Does that make sense?
No, I got it. I think I understand. I think it'll make more sense when I do it in practice, right? When I find a particular stock that I like, and you actually do it. I'm looking on the practice to see if I would be right.
Yeah, but now if you feel like the stock is going down, then you want to buy here, right? And I'm gonna get into
my internet is something weird, so it's breaking up. So
can
you repeat that again? Doing on the put and get
down. You would just buy here, but the goal is so that you don't get confused in all the legal jargon. I gave you all the legal jargon. As a rule of thumb, if you said, look, just give it to me the straight and narrow way. When you get ready to buy, find this line and buy the contract that's closest to it. If you can't afford it, you need to find a different stock that you can afford.
Okay? Is there an amount of money that you would recommend to start off with to just, it's all legal gambling at the end of the day, that could potentially build you well? Would you say, I don't know, 300, 500, 1,000? I know it could be for anybody, but if you're just getting started, you're just getting your feet wet. After you've gone through the phase of testing the practice simulation, what would be the recommended money that you would say to practice with and to play with until you think you've gotten the hang of it before moving on to something bigger?
So to answer your question, I'm gonna just use myself as an example. I've started with to answer your question. Can you hear me?
Yeah, the sound keeps going out, and I think it's just the internet.
Okay. To answer your question, I've started with all types of amounts. Okay. I first funded my trading account with $3,000.
Okay.
I don't feel like that's necessary. Okay. So I funded it with $3,000, but the goal was to manage my risk. And I decided that I only want to risk $250 on any trade.
Okay.
So my question is, why do I have all that money sitting in my account if that's all I need to risk? Okay. I have taken accounts where I have $500 in it, and I use anywhere from $200 to $300 to trade, and I was able to generate anywhere from $250 to $300 a day. Okay.
Okay.
So it's
the driver, not the car. It's about what you know, not the amount of money you have.
Correct. Now, also, if I'm looking to trade a stock like Tesla, now you're just gonna have to have about $3,000 in your account. Like you one good trade, you need $1,000 or more.
But you don't need that to start.
No, unless you want to start trading Tesla, yeah.
Right. Yeah. I'll get there. I'll get there. One day I'll trade Berkshire Hathaway.
Yeah. Tesla is fun. Don't get me wrong, I love it. But it's so yes. So as a general rule, here we go. Just try to stay close to this. Okay. I'm not saying you can never go further, but it's going to be risky. You need more time. The further you go out, you need to have a lot of time, and you better know your strategy is correct. Okay. All right. So here's what we talked about earlier. When you open a position, you pay the ask. At the top of your screen, it will say ask. And then this is the price depending on what strike price you're at. Okay. So the ask will be over here on the calls, and the ask will also be over here on the puts. Okay. Now, when you get in, right? So this is what you buy, but the bid means this is what you're able to sell the contract price for. So when you buy the contract for $268, the contract will immediately become worth $264. So you'll be down about $2. And then you need to wait until the bid at least reaches to $2.68. So you break even and go beyond that. But you won't close out your position for the ask price. You're going to close it out for the bid. Okay. So that's here. When you get ready to close your position, you will receive the bid back. That's what's going to come back in price back. That's what's going to come back into your account. Now, I couldn't catch these moving. So in a real-time scenario, you buy at 268. These contracts are constantly flickering, constantly moving, right? And then you're going to wait till this increases in price from what you purchased it for. So again, if I purchased at $268 and I want to make $100, I'm going to wait till this bid price gets to $3.68. Does that make sense? So you're going to add $1 here. That means I've made $100.
I made $100. I got you.
Correct. And then you're like, oh, I like $100, so I'm going to close it. Okay.
And that happens within 20 minutes?
It can. Or it can happen in 4 hours.
I got you. You gotta keep an eye on it.
Yeah, it all depends on what you're trading and how you move. Every asset will move different. Now, I'm gonna tell you, if you trade in Nike, Nike is probably one of the easiest companies to determine what's going to happen with it historically, but it moves like pond water. So you better have something 3 to 4 months out. If you move in Tesla, it can drive you to drinking. It's going to move in like 10, 15 minutes. So you better be in the right direction. That's all I can say. You know, it's how you like it. You like roller coasters, or you like sure and steady. You know, sure, safe, fast, safe and steady. All right. Okay. So in the app, this is not going to make sense until you're able to get into the app, but for the purposes of the video or the recording, I at least need to go through it. So what you want to do is at least watch this part of the video again once you're able to get into the app. So this is how you're going to actually get into a contract. If you're getting into a call, you're going to tap this button for $4.90. Okay. Then this little section here is going to automatically populate. It's telling you that you're getting a contract that expires on September the 20th of this year, 2024, for at the strike price of $222.50. And it's a call. C means call. It was a P there, it means put. Then you hit next. You can change your order. So there's different types of, different types of orders that I'll go over in a minute, but it's automatically going to be preset to a limit order. If you are day trading, you want to change this order to market order. It's going to just get you into the market rapidly. And you're going to do the same thing when you're closing. Now, it won't be for the best price. When you have a limit order, you can tell it, this is what I want to sell it for. Okay. And then that's how, if you can't watch your trades, you can go ahead and change this to what you want to sell it for when you're closing it. But to get in, you want to put a limit, what you're willing to buy the contract for. Now, it may take some time if it's already past that price. So if you're day trading, you want to change this to market. And then you need to make sure you go here and change how many contracts you want to buy. This is going to be on default to 10. If you're buying one contract, you need to make sure you change this to 1 and then hit review. Okay.
So if it says 10, that means you're buying 1,000.
Correct. You're controlling 1,000. And so for the price, it's going to be $4,900 to control 10 option contracts.
Right. So you only need one, depending on where you are financially.
Correct.
Gotcha.
Then you hit review. All right. So this is me changing the limit order to market order. These are also other types of orders, but most of them you don't need anything like this unless you're closing the position and you're not going to be watching it. So if the market falls and hits your stop loss, which we'll get into later, you can tell it to sell for me because I can't pay attention right now. Okay. You can tell it how much you want to lose. So it really shouldn't be a way that traders are losing more money than they want to if they're just being consistent and disciplined. You can go in and tell it sell for me. But anyway, as a day trader, I hit market order to get in rather quickly. And you can see here, when I change it to market order and the quantity to 1, it tells me that this trade is going to cost me $480 to get into. That's how much money I have to put up. How much I lose of this $480 depends on me, okay? And again, hit review. And this order confirmation is what you'll see. It'll tell you you bought one contract of Apple that expires on this date at this strike price, and I did a market to open, okay? And using Charles Schwab is going to cost me 65 cents to enter this trade plus 1 cent. So I'm going to end up paying a total of $480.66. I will not get this 66 cents back. That is the cost of opening and closing the trade. And if that looks good for you, send. So that part I just went over is the actual app that when you get into and how you need to open and close trades. Okay. Let's see. Let me just check all right, make sure nobody's trying to get in. All right. So we went over this as well. The premium price of the contract, it's the ask price. This is what you're buying. This is what you're selling for. Okay. Think we went over that already. This is how you determine the cost of the contract, and we went over this as well. You look to the ask, and it's going to be the price of the ask plus 100 because there's 100 shares. Sorry, plus $100. So if it costs $5.13, you're going to multiply that by 100, and it's going to equal $513 is what you need to put up, the premium you need to put up.
Plus the fee for Schwab, processing fee.
Correct. So, woo, again, that was a lot of dense information. It was the technicals of how to actually,
It wasn't that bad.
huh?
It wasn't that bad. I feel like with practice, you know what I mean? I played percussion. I know music, you can't compare music to stocks, but I feel like the fundamentals, like, you know, once you practice them and you do it enough times, it becomes like a second language. But I'm sure there's way more to it than that. But it wasn't as bad as as you may think.
Okay, good. So good. So I'm glad to hear that. So basically, what we just covered in that section is going to be how do you actually mechanically, place the trade. So when you leave today, if you want to go and practice, you want to set up your brokerage account, you want to go ahead and download ThinkorSwim. When the market opens on Monday, you can actually make sure you're in your paper account, okay? You can actually practice just getting in and out of the market. Don't worry about what it is. Don't worry about making the money. You want to make sure you're hitting the right buttons at the right time. You're getting in and out correctly. So a common mistake that beginner traders make is that they're meaning to buy a call and then they went over here and accidentally bought the put, right? So, or vice versa, or they're meaning to actually buy the ask and they miss and touch the bid. So This week, I just want you to practice just mechanically, just getting in and out, getting the feel for that. Okay.
Is there an amount of trade, an amount for a new person? Is there an amount, like say, no more, don't do more than 3, or don't do no more than when you're first getting started? I'm talking all simulation. We're not talking about actual, doing real money.
I will say, to answer your question, I will say that practice makes perfect. So when I say that is as a trader, you can lose money. There's something called over trading. And you have to find that sweet spot for yourself. Okay. What I personally found in myself, because you have to trade to know what's your sweet spot. What I found personally for myself is that my first and my second trade, I'll win that with no problem. But if I take that third trade, I'm gambling. Okay.
Is it more emotional?
No, it's just it could be because like I'm usually gonna win on the first one, I'm usually gonna win on the second one. That third trade is 50-50. If I don't walk away from the market on the second trade, the third trade I'm taking is probably gambling. It's 50-50. I could lose everything that I just made.
Right. On that third trade.
Or I can walk away. Now, if I make luck the third trade, I'm closing my laptop down.
Right.
Because I'm telling you, I will lose everything I made and more. Like I will end up in the hole for the day. So
Like Russian roulette.
yes. So as far
Pow, it off. Click, click.
right. So as far as if you're just trying to mechanically get used to getting in and out of the market, you're not attaching your emotions to it. You're saying, I need to learn how to use this app. I can't tell you that it's too much of doing that. But if you're actually attaching yourself to it to say, can I make money? Can I practice making money? Then it possibly can be you're getting in and out too much. Yes. So it's a depends answer as to what your mindset and your approach is for it. Okay.
Okay.
Hopefully that made sense.
Makes sense.
All right. So the next step in the process is you need to find a way to watch what institutional traders are doing. Okay. And the way we do this is by charting. Hands down. This is where the money is made. Also, hands down, this is where you need to spend and dedicate your life to trading if you want to be successful. This does not come overnight. This takes years. There are hundreds, if not thousands, of strategies to approach with charting. You cannot learn them all. If you try to learn them all, you're going to lose money trading because you're going to see this strategy of charting popping out at the same time that one pops out, at the same time the next one pops out, and you're going to have analysis paralysis. And you're going to say, well, which one do I do? Because I'm seeing all of them triggering right now. I would say take your time to learn as many as you can, but one by one, also practicing and strategizing to find out what fits for you. It's like putting on a shoe. Everyone likes either sneakers or dress shoes. Everything feels comfortable to someone else. So before we get in, I just want to let you know that charting is where it's at. So we're going to go over the basics today, at least. Trading view. Trading view is where I do most of my charting and where I know that almost every professional trader charts. It is a robust platform. You can chart anything there, okay? So the great thing about taking your time to learn to chart is that charting is a universal language. You're starting with options now, but if you learn to chart, you can learn to read charts for crypto, for Forex, for futures, for anything. So I don't care where you're starting, charting is the gateway to become trading all markets, to becoming just a successful trader. Okay. So don't feel that, oh, well, she's introducing me to options. I heard all these other things. You got to start somewhere. You got to start somewhere. Okay. So let's look into TradingView. You can go to tradingview.com. And can you still see my screen?
I can. The question I had when I tried to pull up on Google, Webull came up, so I'm just going to go straight to tradingview.com, like you said.
And so here's what it looks like. They have an app. Now, the reason I do not chart on ThinkorSwim, which is where we're just learning to get in and out of contracts, is because if you download the ThinkorSwim desktop and the mobile app, they don't sync. Okay. But TradingView will sync. If you come here and you happen to be at a desktop on your computer and you need to type in TradingView, your account is going to match what's in your mobile account. Okay.
So do
So
you start the account on desktop or
I do both, but mostly like if I'm running to the store, or walking around the house, I'm always on my phone. But if I'm depending on what I'm trading, if I'm trading options, I'm always charting and checking on my phone. My entire options account is set up is on my phone. The ThinkorSwim and the TradingView charting, that's all I need, right? It's on my phone. I also trade something called futures. Okay. Now, with that, I need to be more stationary. So I use my laptop. I'm charting in the same trading view, but my platform is a different platform. It's not ThinkorSwim. And so I need a desktop or a laptop, at least a laptop. I don't have a desktop, but I use a laptop to trade. I hope that made sense.
No, I understand.
Okay. All right. So here's what TradingView looks like. It's going to give you the overall market. Okay, so these same indexes we talked about, which is the S&P, the NASDAQ, and the Dow. And don't worry about the Nikkei or the Nikkei for right now. Basically, those are foreign markets.
Japanese.
Yeah, but they're the leading indicators. They kind of match. Every country has kind of one of these, three of these, okay, that kind of tracks each other. But if you're looking to chart, you go up here to products. And you're going to hit super charts. And voila, give me 1 second. I don't know why my chart makes that noise. I hope it stops. So I might have to, let me see. I normally mute my account, but excuse me for the beeping for a second. I'll tap off of it. But basically, I'm going to explain to you what candlesticks are. But this is what candlesticks look like. And I'm going to take these indicators off and I'm going to explain to you what that looks like as well. But this right here, this is a chart. And this is a chart of the NASDAQ index, the one that controls.
I see that you're shrinking it from,
yes.
How are you shrinking it?
Over here to the right. I'm just touching on the numbers.
Oh, okay. I have it up. That's why.
Okay. Now you may have to pinch action. Okay. So I'm just showing you.
Right over here now. I'm joking.
Okay. So here, when we talked about ticker symbol, if you're looking for, it looks a little different in the mobile app, but if you're on the desktop and you're looking to trade a specific ticker symbol, you want to hit here and you're going to type in the name of the company or the ticker symbol. Now, again, TradingView is robust. Everyone uses it. So you can see if you're a stock trader, you're looking for funds, futures, Forex, crypto, indices, bonds, anything, options, you can find it here, right? Now, these companies automatically populate it. And you just need to, if you're searching for Apple, you can take it, but let's say you were looking for Apple, right? So I type in Apple, which is the name of the company. You want to always make sure that you're on a US stock exchange, or else you're going to have the wrong data. Okay. So we learned how to find ticker symbols before. Remember, I told you to write them down. You can also find them here, and you want to make sure that this is the ticker symbol. This is the name of the company. And this is the stock exchange. The stock exchange tells what data, like what the candlesticks or the chart's going to say, and you need to be on the right one that matches what your option contract is going to say. Okay, so you hit here, and then voila, it pops up. Now every chart has a time frame. Okay, I don't trade on ticks, but I have minute charts. Okay. The lower and hour charts and day charts and month charts. Okay. Now, the lower time frames are from when you're day trading. So when you say, how long are you going to be in the market? Well, I can change my chart to a 5-minute candle. This means that every one of these candles represents 5 minutes of time and what the stock did in those 5 minutes of time. If I'm probably going to be trading for months out, which is something called swing trading, I'm going to be holding a couple of days, I might want to look at a daily, weekly, or a monthly chart. So I have to adjust my screen a little bit, but each of these candles, and I'll teach you how to read candles, each of these candles will represent 1 day's worth of time. Okay. Here, if you want to change how your candles look, you can come over there. I usually keep mine here because I like it when my candles are green, means it went up, and red means it went down. Now, if you're colorblind or have issues with seeing or color, you can change the colors of these candles to maybe like black or white or something that will help you contrast. Indicators, we'll get into these a little more, but these are where I find strategies to help with the market if you're looking for any. Now, we draw on charts as well. We can draw trend lines and different things to help us kind of see where the charts is going. I normally just stick with the trend line. So that wasn't it, but let me go back to the 5-minute chart where I mostly trade. And we may see that, to draw a trend line, you can draw something like this where the stock is touching and you might be looking for it to break out of a trend. Another example is you can write some text. So if there's something you want to remember about a stock, like we had high news today, which caused this bar or this gap up or something like that, then you can make notes for yourself. So when you go back in the week to review, it's just a way of journaling. Now, I journal on paper most of the time, but some people like to journal in their chart. So that's how you can do it. I'm not sure why you would want to use smiley faces or emojis, but they're there as well. And let me see, it's another box I was looking for, but if you want to highlight or brush or use an arrow to point something out in the chart or a rectangle. Sometimes I take rectangles and mark my charts for gaps.
What would be a gap? Is that a gap right there?
Yes, exactly.
Between those two green ones?
Yes, that means the stock.
What does that mean?
That means the stock gapped up. So here, this is where the stock closed for the day. This is Apple. So if you see down here at the bottom, when I hover over it, it says Thursday, September 5th.
Yeah.
That's where it closed. But when it opened the next day on Friday, September 6th, the stock opened all the way up here. So it was a significant gap. Most of the time, stocks are moving so that they touch every number. But it closed at $222. And for some reason, it opened at $223.93. So $223.38 and then opened here. Okay. So that's a gap. Some people trade gaps as a strategy because they believe that they know that gaps fill. And it did. It filled. So there's one strategy. Gaps fill themselves.
Meaning it'll go back to it's
it needs to cover this area.
Right. So would that, okay, so give me would this be an example if you would put like so the trend it's on a downward trend, put like a put on something like this because you know it's eventually going to make its way back down to where,
But yeah, and that's an advanced strategy because You have to determine how much a stock gapped up. I've seen stocks that gapped up. Let's see, what was it? NVIDIA might have jumped up 50, 60, $70 overnight.
Mm.
A strong gap up like that, it's going to take months to fill.
Mm.
But this gap up was only by a couple of cents. It might fill today, which it did, or the next day. You see what I'm saying? So, yeah. So it just depends, and that's going to depend how much time you need. I would have filled this gap in a day, the same day. Like it gapped up the day and it filled the same day because this is a 5-minute chart. So it took a couple of minutes to fill, probably like an hour or so, right? From market open, it filled. Yeah. So at 9:30 my time, this is central, and the market opened at 8:30. So in an hour, I would have made my money, right? Okay. So yeah, so it just depends, but other stocks can take months to fill if there's a strong gap up. So I would have lost money if this stock took 3 months to fill and I only bought an expiration for 1 week.
I got you.
Yes. So it depends. But yes, so these are
Could you have gotten out of it and only and to mitigate your losses? So you know you're going to lose, but you would have
could have. Yes.
Okay.
All right. So that's just kind of an overview of TradingView. You can come here at the top. Right now, my layout is with one chart. I can change the layout to watch 2 stocks at the same time. So I can watch Apple over here, and then I can touch here and watch. This is Coinbase. It's a crypto stock, but let's say I want to watch Tesla. And so then I can watch Tesla charts as well as Apple charts at the same time. And you can continue, to build out your chart. Now, for the free version, you're only going to be able to watch one chart, but once you get into the paid versions, you'll be able to watch more than one chart, if that makes sense. But normally I just watch one chart. You can create a watch list over here, this first column. Okay. All you need to do is click the add symbol, type it in, and because I've already added them, they're here. But if I wanted to add this one, you're just going to hit the plus sign and it'll add it over here to a watch list, so you don't have to type ticker symbol in every time. Okay. Now, if you need alerts, you can set an alert. So if I'm waiting on Apple to cross up or go up a certain amount, I can have an alert sent to me or chimed on my phone. So you can set it by the price, which is normally what I do. And you can put in what conditions you need to be met. I need it crossing up. I need it greater than a certain number, less than a certain number. It's moved up or down a percentage, but you could keep it simple. So I could put that I need Apple to be more than, send me alert when Apple gets to $210. It's more than $210, which it is now. So let's say $230.
Okay.
All right. And then I can set how long I want to watch this. So how long do I want this alert to be, active, which it looks like it goes to a certain period. And then on the notifications, do you want it to notify you in the mobile app, which you'll probably you need to make sure that your notifications are turned on for the mobile app. If you're here on the desktop, do you want it to show in the corner of the page a notification? Do you want them to also send you an email? And if you want it to play a sound when Apple or whatever your stock is does this, then you can set the sound. Okay. Then you hit create and it will tell you it's active. And then you will see that it's stopped or whatever because it was triggered or because your date to watch it ran out. So that's a general overview of TradingView. And if you're getting started with trading, that's pretty much what you need to know. Okay. So I sent an email and it's going to have a link directly to TradingView. If you missed it, please go back to the email, read it, click on the link, and you can get started with TradingView. So let's talk about how to actually read the candlesticks. You saw the candlesticks. Let's talk about how to read them. So a candlestick tells within a specific time frame where the stock price opened and where the stock price closed, and actually what it did all in between that time. Okay. They're very important because they tell a story. As buyers, we can see where the buyers and sellers, which are usually the institutions, like where they're buying and selling and what they're doing. As retail traders, we don't make enough money, or we don't inject enough money into the market to actually make it move. Okay. These candles right here, like something to shoot up like that, that's institutional money. That's telling me their institutions are buying. Uh-oh. Okay.
So institutions are day trading?
Yes. So they're taking your money. Another reason why people want to learn to trade is because when you put your money in the bank and you said, I'm putting my money in this savings account, the bank gives you what they told you, like 4%.
Right.
They're putting their money in these same option contracts and they're keeping the 90-something%.
Fuckers.
Yes.
Keep them stupid, so they never know. They know no better.
Yes. The same. I mean, it's happening. A lot of people just don't know about it. But like I said, it's happening on the Chicago Stock Market Exchange. And we're just focusing on, oh, let me 401k, let me buy, let me buy and hold. There's a whole nother world out here and they're doing it. So yeah. So candlesticks, you may have also heard this term called price action. Candlesticks also show the price action. That just means the movement, what the price of the underlying stock did. So in your learning time, you need to know that a candle contains each of the following elements. It's going to show you the price open, the price close, the price action, the body, and the wick. Here's what it looks like. So this is a green candle. For me, that means that that means that the candle closed, showing that there was an increase in price. All right. Anything sticking out is called a wick. This part of the candle is called the body. And here's where the price opened. So let's explain this a little further. A candlestick like this means that the price opened here. It went as high up as this point right here. But by the time the candle closed, it closed right here. So a wick is formed to show that the price once went at a certain point, but retraced back down before the time frame of the candle closed. Now remember, candles can come in different time frames. So this could be a 5-minute candle, a 15-minute candle, a 1-hour candle, a day candle, a month candle, a week candle. But that's how you read it. You at least are able to see the price action, where it went, where it ended, where it began. Okay. Now it looks the same if the candle was a red candle and it was moving down. So this candle would tell me that the price opened here. The price moved as far down as here, but then it started going up a little bit.
Okay.
And closed there. So now the wick is on the bottom. The open's here. It created a long body, but it closed there. Okay, that's just basic candle structure. Now, larger candles or bigger candles represent strong movement and strong momentum. That's where you really make money. Okay, larger candles are normally seen in the first hour or two of the day, and again at closing bell. Normally, okay? Smaller candles represent weaker movements in the market. If I see a smaller candle like this, that tells me there's not a lot of buyers and sellers out there to move the market. A lot of times when I see smaller candles is when the stock market in a whole is waiting on some big news that's going to affect the stock market as a whole. So there won't be a lot of volume in the market. Another time I'll see stronger candles is when we're outside of those peak trading windows. We're outside of the first 2 hours of the day, and we're outside of the last trading hour of the day. Now, a caveat or a twist to this is you could come into the market in that first 2 hours of the day and see smaller, weaker candles because there may be a news event set for the day at about 1 or 2 o'clock. So you may see smaller movements until after that news is passed. And you want to wait until after that news is passed. You want to bed your hits and set yourself up to win, right? All right. Now, there are tons of candles, and we won't be able to, not tons, but quite a bit of them. And we won't be able to go through all of them in this class. But I challenge you this upcoming week to learn and actually just watch your charts. When I started for these types of candles that I'm about to cover 3 important candles, okay? These 3 candles represent changes in the market. And something as simple as just pulling out your phone and just watching the chart, your brain will start picking up on patterns, okay? Automatically, you won't know the name of it, but your brain will say, when I see this happen, that always happens. When I see this happen, that always happens. And I'm telling you, I used to just sit and watch as often as I could. I used to just stare at the stock market. Now, everybody doesn't have time to do that. But if you can, that's going to help you. That's going to determine whether you need to be a day trader or a swing trader. And I'll explain what those are. If you don't have time to sit there and stare at a chart for like 30 minutes to an hour and a half, but right now you're learning. So you need to stare at the chart the first 2 hours of the day as much as you can, right? So if you don't have that
accent comes out every blue moon, that southern New Orleans. Go ahead, I'm listening.
Okay, so if you don't have time to stare at the chart, you might say, I might need to be a swing trader where I don't have to look at the charts as often. I can check them on like a Sunday of what should happen, and I can periodically check to see when I need to get in and get out, and I can buy a whole lot of time in the future and wait for it to trade, my trade to take place. I can set it and not quite forget it, but be, more relaxed about it. But anyway, if you want to pick up on this fast, I encourage you to download these platforms to your phone, and starting Monday, when the market opens, see what it does, okay? I promise you, it's going to fast track you the more you can do that, okay? So this is a doji candle. So a doji candle is a very small body. It has a very small body to probably almost no body at all. So I can actually sometimes not even see a red or a green indication of how the stock moved. So this shows.
I'm sorry, something just hit me. All right, I get it. I think I get it. Let me know if I'm tracking. So the big institutions, when I was reading this doji candle thing, it helped me. Something clicked for me. When a big institution decides, let's say a college decides they're gonna buy, that moves the market. That moves the. But in this, if I saw a doji candle, would that mean that whoever they're buying they're buying the stock from, they already know what it is. So it won't be a whole lot of movement, although there's volume there. So there's no body, there's no long period of time of, am I understanding that right or no?
Not quite, but it's a good guess. So I like the way your brain is thinking. Like it's really trying to grasp it, and I like that. So what a doji actually means is that the buyers and sellers are agreeing on a price, and they're actually struggling. The buyers
they
can't beat. Yes, the buyers can't beat the sellers. Because look, this is actually a long wick.
Okay.
That means the stock shot up here.
Oh, so okay.
And then it
Oh, it
tugged
opened
and
in and
it
closed very close to each other.
correct. Then it
Got it.
shot up there, shot down there. And then it came back. You don't want to be anywhere close to that.
Right.
You
That
can
means
get in.
run.
Yeah, you're gonna get in this trade 1 minute. The candle is green because it opened here and it shot up there, which means at some point this candle is green. You're like, oh, it's going to take off in the call. I'm getting in the call. As soon as we get in the call, it
Boom,
dropped
go
down
right
and
back
went
in.
all the way here and it went red. You're like, oh man,
That's
it done
right.
dropped. I'm losing my money. I'm gonna sell, and then it shot back up towards your direction, right?
Oh,
And
you might get you some Jack Daniels then.
right, same here. So this is a whipsaw, it's indecision in the market. We don't know what way they're tugging. And if it closed here very close, that means the buyers and sellers started saying, okay, this is the price of the asset. We'll just buy and sell here. We'll buy and sell here. We'll buy and sell here till somebody can win. Okay. So the price went up and down, but closed relatively close to the same place it opened. So doji candles, know them. They're indecision in the market. You don't want to get in the market when it don't know what it's doing.
Right.
Okay. These are shooting stars and a hammer candle. Now, they look the same. The only thing that changes the name of it is whether it's a green candle or it's a red candle. Okay. So a hammer candle has a kind of shortish body, mediumish body, but a very long wick. The shooting star looks exactly the same. It's just in reverse. It's a hammer candle in reverse. This is often a strong signal of reversal. So what that means is if a stock was going down, I have 3 long red candles. I see a hammer candle. That tells me it's about to reverse and I'm probably going to get a couple of green candles. So this may be an indication for me when I see that if I'm watching a chart saying, when should I get in? Right? That's one indication. It's not always, nothing is 100%. Everything is going to be an analysis or a risk assessment. How more probable than not, or very unlikely, right? It's a probability game that you're playing with the market. So when I see a candle like this, there's a probability, or at least one probability that I can check off that the stock market is about to go in the opposite direction. And when I see this, if candles were going up and I saw a shooting star, I'm probably looking for a reversal that the market is about to go in the opposite direction as well.
Okay.
Okay. And I thought I had a third one, but I guess not. Okay. So the next thing is learning that candles also show us support and resistance lines. Now, when we talked earlier about traders being, understanding, like having too many strategies, this is one simple strategy that people use. They don't follow all of those indicators. They just look for support and resistant line. Now, a support means like I can stand up on top of something, right? I can support, it's the floor, it's solid. I know it's going to hold me up, okay, down here. This line right here shows that this level, which is likely a price level, is a support for the stock right now. So anytime the stock jumps on the support level or jumps on the floor, it bounces right back off. It bounces right back off. It bounces right back off. Now, where is it going? To a resistance level. That means it's a ceiling, right? This keeps me inside the house. So if I jump off the floor, I need something to hit in the top of my head, knock me back down. Okay. So at this strategy, I would be looking to buy at a support level. You say, okay, well, now I learned when to get out. I learned when to get in the trade. How do I know when to get out of the trade? Well, one of them is when you make the profit that you want, but the other one is you can look to see where the stock historically has gone and as a resistance level, and you can say that'll be my take profit. Okay. And I'm going to show you some of those in the charts, but support and resistance levels are 100% hands down something that you should learn. And it goes vice versa. So once something hits the resistance level and you ask me, well, how many times do I trade? Well, if I got in here and it hit a resistance level and I secure my profit, I know it has a probability that it's going to go back down and find support again. So I might put a put here and go there, and then I'm done, right?
Is that one of those backwards hammer things right there, right next to the first arrow, the first
this
go
one?
up right there, and then the two candlesticks over? Is that one of those hammer
That
things?
one, that does look like what's it, a shooting star?
Shooting star,
So
and the other one was called a what?
A hammer.
Hammer. That one was the hammer.
That looks more like it. Yep. Normally it doesn't have a high wick on it, but yes. So you can see when you see those, there's a reversal. Now there's two candles later, but the reversal came from this one. So it's just an indication that the market is about to reverse.
You want the reverse in the opposite direction.
This is a perfect one right here.
Yeah. Okay. And it shot right back up. And then so if you put in a call at any price point between those two support and resistance lines, you would have made some money, and then you're gonna take your ass and go get you some coffee.
Now I probably would have got out on this candle. Let's say if I perfectly timed the market, which is very hard, I got in and this candle shot up. I'm not waiting. I'm not holding until I get to my support.
I'm saying any point, anywhere in between those two, anywhere inside the house, as you would call it.
Correct.
Okay.
Now I'm gonna be honest with you. You want to buy closer at the resistance lines.
Okay.
Okay. Because what if you got in here? You're like, oh, I know we going here. You'd have got scared out the trade. The minute you got in at this candle up top, it reversed. It retested. And then it went up. But I promise you, when you got in and this candle went down, you'd have lost about $100 and you'd have got out. And then you'd have kept watching the market. And then you'd have saw it went all the way back, and then you'd have been frustrated for the day.
Right. Cussed everybody out.
Yes. So wait. I wouldn't tell someone to buy in the middle of a support or resistance line. You want to buy coming into or reversing from the support or resistance line. Does that make sense? That's more of a smoother trade.
And in this particular case, what was this? Is this a 5-minute or 20-minute?
Not sure. This is just a sample, just to show you, where to support. Now, as a day trader, I stick with a 5-minute chart.
Yeah.
As a swing trader, I stick with a 4-hour to a daily chart.
Gotcha.
Okay. Another simple pattern that's in the market that I use, honestly, especially for starting out, and I use now because my eyes just are drawn to them, are W patterns and M patterns, or triple tops and triple bottoms. So it'll be a W with an extra line, or M, like the lowercase m. And let's see if we can find any. And I'm going to go back to, let's see. All right. So on Friday, I'm zooming in like this. Don't worry about it. I'm just trying to show you what a W would look like. This is where the market closed off on Friday. As you can see, do you see this kind of starting to look like a W?
I see an M.
You see an M? Okay.
Is that an M? Is that like a
follow this for me. No, but don't look at this last part. Look where my indicator is. Do you see this starting to look like a W?
Yeah. Okay.
All right. So here's where I got stopped out of the trade. A W pattern normally signifies that the market is going to go up. Okay. So I would have gotten in here thinking that my next resistance line is about, if I look backwards, is about here or even here.
Right.
and try to ride it up. But Friday was a crazy day, so I lost money and it went.
Mm.
The W did not form. But I wanted to show you at least what a W might look like. Okay. Now
What
this,
is the significance of an M?
so the M would be the reverse. That means that the pattern would have been up here and it would have dropped down. So W's signal that the market is about to go up, and an M pattern would signal that the market is about to go down.
You see what the bottom of that resistance line is?
Mm-hmm.
You don't see that M right there?
Yes. So now,
You wouldn't have known that was an M
correct.
because it
In
looks like
correct. Hindsight is always 20/20 in the market.
right.
But when you're trying to play it out yourself, let me see what that would have looked like. Let me see what that would have looked like. All right. So this is what it would have looked like real time if you didn't have that.
On a 5 minute was saying. So every 5 minutes.
Mm-hmm. This is what the
Okay.
chart did every 5 minutes.
Because you in your mind you thought this was about to go
Up. It's a W.
all right, so swoop down here and then go up. You can't see my finger, but you thought that was going to continue to go up.
Correct.
Mm.
So do you see these two bottoms right here? It touched here and made a low. And if we look all the way over here, it just looks like a W pattern is forming. It's not, the stock is refusing to kind of just go lower. It's been ranging and hovering. Right? So honestly, my entry point would have waited till it got back to this kind of medium high.
Mm-hmm.
And when I would have got in. That's what's the stock market is going to be playing out in your face, and you just have to take the most educated guess. My most educated guess was, oh yeah, a W pattern is forming. But it ain't play out like that. This is what you're gonna have to get used to. The market movement. Now it don't normally move this fast. That's more like a second tick chart.
Mm-hmm.
But every 5 minutes, this is what would have happened.
Resistance and continue to go down.
Correct.
Yeah.
So I could have made this part right here where it broke resistance my stop loss. So when you say, how do we not lose money? Do you have to like ride it down and lose all the money? No, I would have just got out for a loss earlier at a certain point.
So what was that price point? What was the 16 or $18?
No, this is NASDAQ, so it's an index. So that's like $18,000, but you have other ways that you can trade it for, that's cheaper. There's a ticker symbol called QQQ and a ticker symbol called SPY. QQQ will allow you to trade option contracts on the NASDAQ, and SPY will allow you, which we call it SPY, will allow you to trade option contracts on the S&P 500.
Okay.
All right. So those are W and M patterns, or at least a W pattern that I was able to see. And sometimes, again, it's not a double bottom. Sometimes it's a triple bottom. You may see it touch the third time and shoot up. And the same for the top. Sometimes you'll see it touch a point twice or three times and then go on down. Now, the final step that you need is a game plan that's specific to you. So how do you create a winning trading plan or a good game plan? You want to set clear, measurable, and realistic goals that will help you guide your trading decision. So clear goals is, if you're just starting out trading, yes, people make like $10,000 a day trading, but can you make 50 to 300? Right? Because how much do you make a day? Not like now I can't, don't you answer this because I don't want you to answer it. But everyone is not business owners, right? Everyone don't know how to generate income. So if you're working a 9 to 5 and you're making 30, 40, but anywhere between $30 to $40 a day pre-tax, that's going to be anywhere from 250 to 300 less than $400 a day.
Okay, right.
Right. So to replace your income, if you're trying to really replace your income trading and look for freedom, why you can't just make that?
Yeah, I don't have any lofty
No,
goals.
not you. No, I'm
Are
talking
you
to
speaking in general? I'm sorry.
yes, I'm sorry. I'm speaking to everyone in the class.
Yes, absolutely.
All right. So create and set measurable goals, realistic goals to help you guide your trading decision. Okay. Manage your risk. So how much money are you willing to risk in your overall trading account? And that is going to go individual to each trader. So when we talked earlier in the recording, and the question was asked, how much should I begin with trading and put in my trading account? How much do I need to start trading? How much are you willing to lose? Like, you should expect to lose everything you put in there. And if you can't afford to do that, don't put it in there. Okay. How much of your overall account are you willing to lose? Like, there's an amount you need to be able to lose on your overall account balance. Like, this is everything. If my Charles Schwab account goes to zero, but then there's also a specific amount you need to be willing to lose on each trade. So if you have $1,000 in your Charles Schwab account, for example, and you say, well, look, I'm only willing to lose $250 on every trade. Okay. Well, the max amount that you need to put up for each option contract trade, like your trade when you enter an option contract, is $250. Now, will it go to zero? You don't have to let it go to zero, but if it does, you've also created another barrier to manage your risk. Okay. Then the third thing is you need to plan your third or fourth trade is plan your trades. So, okay, I'm putting up $250 for every trade. So if that goes to zero, that's all I'm losing on this trade. But even though I'm in this trade, I'm only willing to lose $50 of this $250. So you've created bounds and all kind of levels for yourself where you don't have to worry about losing. Like, how do you put different measures in place so that you say, well, look, if I lose this way, I'm going to protect myself over here because I'm not going to lose that much. And I'm going to protect myself again over here because I'm not going to lose that much. That, like, trading doesn't have to be gambling. Like, these stocks are going to do the same thing. That's one of the secrets that a lot of people don't talk about. Is the stock market is a creature of habit. Why do you think we have support and resistance line? Because it touched a specific place multiple times. Stocks are like magnets. If it hit a place, it's probably coming back. If it gapped a place, it's probably coming back. If it fell off the cliff of a place, it's probably coming back to where it fell off at, right? They do the same thing every time. Now, that's in a very micro level, but if you watch the stock market in an overall general big picture, the overall stock market is going to do the same thing every year. Every year, there's a time of the year when people flood to the stores and buy things. Christmas time.
Yeah, it's coming up.
Who benefits from that? You're buying your kids Nike sneakers. You know they got to have the best. Everybody going to Walmart. I don't care if you're cooking or you're looking for some toys. You're going to Walmart or Target. Everybody buying new phones. Most of the time, I don't know if you know it or not, but you'll start to look at stocks strategically. But Apple is probably always coming out with a new phone somewhere around September.
Yeah, they got 16 coming out. And they got the 24 or 25 coming out on Samsung. So it's probably a good idea to keep an eye on those, huh?
All I'm saying is the market does the same thing every year. People pull out their wallets at the end of October. We have Black Friday. You will, if you pay attention to the market, you'll see a lot of those stocks start to rally somewhere in the middle of October all the way through December. Not a suggestion for you to buy, hold, or sell, but it's a good thing you can watch.
Will those be good swing trades since you already know during that time frame is going to go up? Like you put in a call for. I know you can't tell me what to do, but I'm just saying, like, you know what I mean? I'm asking you.
I'll tell you what I do. I watch those stocks every year, starting in September. The market goes down, and it's a very rough month. The market goes down every September. It is a horrible month.
It's the perfect time to put in a
I'm
call.
looking for puts every September. I'm
Okay.
watching for setups for puts every September. And now nothing can go down for forever. The market never falls for forever. It's been around for years. So historically, as long as I've been trading, the market kind of tends to settle falling around the middle of October. And then I know we're going into Christmas season, so I'm looking at stocks that's going to benefit from that. And I'm saying every year what I'm doing is saying, well, when can I put in a call? Is everything perfect? No. You want to know why? Because you always have to watch the news. We never planned for the Ukraine war. That tanked the market. Economics, everything catalyst happening all around the world is going to affect the stock market. And that's why I told you to download the investing.com app over here and read the news every day. This is a free app. This is a free app, investing.com. What you're going to do is you're going to find the economic calendar, which is going to give high news. Okay. Every week, you're going to look at the economic calendar, and I'm going to show you that in a minute. But in the investing.com app, every morning, you need to go and skim this news. And if you missed that email that I sent you, you need to go back and watch it. Every morning, you need to skim this news. Every night before you go to sleep, you need to skim the news. This is now a part of your life. You're a trader. There's no more excuses. You're not leaving here not being a trader. All right. So you're going to watch the news to determine if something else is going to go on, right? So you're planning your trade, you're creating a trading plan, and that is a part of your trading plan, like reading the news. You want to know what's your stop loss in the trade. Again, if I'm only willing to lose $50 of the $250, then that's your stop loss. Now, develop your trading plan a little bit further. Determine what type of trader you want to be. And I encourage you to, over the next week or two, watch the stock market and see, can you watch the stock market between the first 2 hours of opening or at the last hour before closing bell? That will determine whether you need to be a swing trader or a day trader. If the stock's going real fast, give you anxiety because they closing and turning around every 5 minutes, you might need to watch something slower. One candle's forming in a day. You might need to be a swing trader, right? You need a couple of days for these candles to play out, right? What type of strategy will you trade? I'm going to show you a few, but I've already shown you some, but I'm going to show you some more. So I've shown you the W pattern. I've shown you the M pattern. I've shown you the support and resistance lines. And all of these are different. You don't really need support and resistance lines. Maybe you do, but you don't have to have them to really find an M pattern or a W pattern, right? But there's hundreds of strategies, but you need to find one for you. What time of the day will you trade? You don't need distractions. Like if you're going to be a day trader, you can't tolerate distractions at a specific time. If you have 30 minutes to give, then that 30 minutes doesn't need to be distracted. If you have an hour, you don't need to be distracted. Like I've lost trades forgetting I was in the trades because I went off to do something else. I did, sadly. Okay. Now, there's a myth that says that day traders means that you trade every day. No. If you journal and you look and you learn the market, you're going to learn that the market may do the same thing on Mondays and the same thing on Tuesdays and the same thing on Fridays. Most of the time, I can get in 2 days of the week and make whatever I want to make out of the market. And I don't need to trade anymore. But I'm a day trader because of the time period.
I got it.
Not because I trade every day. Okay. You need to dedicate time to learning and the times that you will actually sit down and review what you did, what went well, what mistakes you made. So I showed you the investing.com app. So I'm going to run through this because we're at our 2 hours now and I don't want to hold you. I don't want you to get tired and like my brain is no longer there.
No, I'm here with you.
Okay. So market news, go to investing.com, download the app,
Okay.
and create a plan for yourself where you're going to review the news. Okay. Now you're going to go over here to tools and you're going to find the economic calendar. All right. On Sundays, you want to plan your week. So you're going to go to this
This is
week.
on your phone or you do this on your desktop?
Right now, this is my desktop. The phone is going to look a little different. On
I'm
investing.com.
fine with what you're doing. I'm trying to see what.
All right, I'm about to show you. If you're on the app, you want to click on those 3 dots to the lines to the side that says more.
Got it.
All right. And then you want to look down where it says calendars.
Yep.
All right. And then you want to scroll to this week.
This week, got it. Okay.
All right. So on your phone, you're going to see a little funnel at the top. Wrong one. Sorry. Never mind. Let's see. I'm trying to figure out how to filter it, but it's okay. So this week, now what you're going to have to do is scroll through the data. It's going to show just like this, where you have news from Australia, all around the world. This economic calendar is going to show you everything that's happening in all the markets, but you need to just look for the United States market. Do you see that flag?
That's it.
All right. So I can show you real quick on how to filter it. If you're on the desktop, you hit filters. You want to hit clear all. You want to come down to only United States. And then you want to hit apply. All right. So now it's only United States news. You need to sit down every week on Sundays before the market open. You need to take some time and find out what high news events is happening on what days of the week. Because remember, as we stated earlier, the market may have indecision until that high news event come, or you can be in a trade thinking it's going one way. And if you're in the trade during the news, you could literally go to zero in a matter of seconds. So these are bombs. Okay. Now, these are the news that you need to look out for. These 3 stars mean that it's a high news event. Anytime you see 3 stars, 1 stars, I wouldn't worry about them. Very low news, they're not going to be impactful. But 3 stars, yes. 2 stars, medium, depending on what it is.
Does it matter if it has August or July next to the name? Like I have 3 stars. It's S&P Global. Has August next to it?
It's just that means that's when the PMI data report is going to be. That's what the report is showing is numbers from August, but it's being released this week. So
Okay.
August numbers is being released this week, and because it has 3 days, it's 3 stars. It's important. So you need to know those times because look, 9:45. That means that's after opening bell. So if you're in that trade and it's in the first 2 hours, so you're in a trade, you're going to get crushed. Okay. All right. So the next thing is if you go back and you hit markets, if you're on your phone at the bottom, all right, and you go slide over to indices future at the top.
Yep.
All right. The top 3 or 4 says US 30.
Yep.
That's the Dow. US 500. That's the S&P.
Yep.
US Tech 100. That's the NASDAQ. So you can watch the indexes from there. Okay.
What does it mean by watch that index? And what am I specifically looking for? If I click on them and something will happen?
I'm about to show you. All right. So if you're on desktop, you're coming to indices and you're going to hit indices future. And here you go. When I say you're watching the overall market, remember, the US 30 or the Dow, as we learned before, it has the top 30 traded companies in the United States. It's a gauge for you to see what the top 30 companies in the US is doing. The US 500 is the top 500 companies in the United States. It's a gauge for you to see what the top 500 companies in the market is doing. The US tech is the NASDAQ. It's going to tell you what all tech is doing. So whenever you trade, a rule of thumb is you want to make sure that these market indices, these three right here, have a consensus. If the Dow is in the green and it's showing positive, but these other two are in the red, you're going to see those small indecision candles in the market. You're not going to have good movement in the market. So, but you see the way all three, this is Friday's numbers at close, all of these are negative and they're kind of like a lot of points. That's when you're going to get this right here. This nice move down. You'll get that money move. Okay. The stronger, the better. There's days I've came into the market and these basis points or these changes was only like $5. The closer it is to zero, that means that the market's direction could change and go the opposite way. Okay. All right.
So the negative now.
Yes, but it could be positive 400, or it can be positive 2, or it could be negative 2. Those aren't strong positives or negatives. So if it was a negative 2, that's not a strong negative. That means that the market could turn positive anytime.
Okay.
All right. So the rule of thumb with the Dow, you want this to show strong. It will likely be about 150 points or more in either direction.
Okay.
With the US 500, about 25 points, positive or negative in either direction. With the tech, 75 points, positive or negative. That's a good locked-in indicator. And then you want them to all be showing positive or negative. If not, it's called a mixed market. I would not trade until the market got together. Okay. All right. So that's an overview of investing.com. Again, on Sundays, you want to review for the weekly bias. You want to watch those when you're going to have high news events. 2 hours prior to opening bell, you want to skim the news again, and you want to maybe start looking to see what the indices are doing. How the indices again are, you want to look at these three to see, are they lining up positive? Are they lining up?
So you're not clicking on them to do anything. You're just literally looking to see if, if
correct. You're watching. Correct. It's your news channel. It's your gauge. It's just another kind of bit of information that you'll be using to approach the market. Okay. So you're going to be compiling a whole lot of data. What time of the year it is, what day of the week is it, what's going on in the overall world, what's going in the market, what do the candlesticks look like? You're going to compile a lot of data to make a decision as to whether you get in a call or a put, or whether you stick with cash and don't trade. You don't have to trade just because the market is open. All right. And then you need to review this again, but the news again, at least before you go to bed. Okay. So we talked about a few strategies, trend strategies, and that's what I just talked about. So you can be a trend trader. This is one strategy or approach to the market. We just went over this. The Dow needs to move plus or minus this amount, S&P, the NASDAQ. And so you determine the atmosphere of the overall market. Again, look for consensus in the market. How strong is that direction? Okay. The major indices determine the feel for the overall market. So don't just try to get in Apple or Tesla or one stock by itself. You need to get a feel for what's going on in the market. What are these indices saying? Because Apple, if you think Apple, you're getting in a call in Apple, but this S&P or the NASDAQ is going down, it's going to drag your call down the opposite way. Okay. So you're not trading in a bubble. You need to find out what's going on in the market. All right. We went over this, that you can trade SPY or QQQ to trade these indices if you prefer to just trade the NASDAQ or the S&P. The Dow, I would not option trade it. You can trade it if you decide to go to futures at some later date, but I don't trade it in options. Okay. Earnings strategy is another strategy. You can go to earningswhispers.com, and what you're going to find out is what earnings reports are coming up for the month. Companies report earnings 4 times every year, so once a quarter. Historically, there's historical data around earnings. Earnings means that what you want to do is, the strategy is to find the earnings date. So you can go back to yahoo.com, search for the company, and you come down here and it's going to tell you the next earnings date. So the next earnings date for this company, which is Tesla, is October 18th through the 24th.
Mm-hmm.
Okay. So you got that date in your head. What you want to do is mark that on your calendar or write it down. Now, you need to do some research. Stocks have a tendency to move a certain direction 2 weeks prior to earnings and 2 weeks after earnings. You want to look at a chart to find out for the last 10 years in that specific quarter, if it's quarter 1, quarter 2, or quarter 3, just focus on that quarter for 10 years. What did the stock do 2 weeks prior to earnings? If it moved up 8 of the last 10, there's probability that you might can play it 2 weeks. And it's same for for after earnings. Now, after earnings, playing things after earnings can be a lot more risky, especially the very next day after, because the option contracts are experiencing something called extrinsic value, and you can get crushed, an IV crush. I would give it some time for the market to settle out before I try to jump in after earnings. But that's an earnings strategy. Okay. So this strategy also contains something what they call buy the rumor, sell the news. Never, listen to me. I like to never say never, but listen to me really good. Never, and I mean never, hold a stock through earnings.
Okay.
Ever.
Right.
Ever. There's a strategy for it. Now, if you're talking about gambling, don't do it. Do not hold your stocks through earnings. You're going to buy the rumor. With this strategy, you're going to take at least 2 weeks out. If you think the stock is going to go up, you buy the rumor 2 weeks out, and then you sell it. Sell the news. The news is that earnings is coming. Sell prior to that news report coming out. Take your money and run. Leave it alone. I don't care if it jump 100 points and you miss $10,000. I do not care. I promise you, you don't want to play that. You don't want to play the game. Okay? All right. So we talk also about price action strategy. And that's basically the price action, again, is how candles are moving up and down. And so your approach doesn't have to be earnings. You know, it can also be like just watching the candlesticks and trading that way, looking for M and W patterns and triple tops.
Didn't we just see a W pattern in those candlesticks on the chart?
Almost. It looks like it. Pretty much.
Well, right there under resistance. Well, right to the left of resistance. There's like a W pattern.
W, yeah.
Well, right beneath it.
Yeah, right here. Yeah, there's a little W. You're right. Look how your eyes picking up on stuff already. Don't take long.
It's actually my lady. She's sitting right next to me. We're going through
okay, cool. All right. So yes. All right. So price action strategy, again, that's what we learned about, but you have to spend time with charting and candling. Charting and learning the candles. And there's a lot more to it than what we went over today.
Sure.
Okay. So why do traders lose money? Hope. I'm hoping that this trade goes in my direction. I know I'm down $100, but I hope that it just turns around and then it continues to go against you. Greed. I've made $2,000 today, but I'm on a winning streak. I gotta go get more. Like, right?
You couldn't just take your happy ass home and go drink your latte with your $2,000. You had to
Right,
sit there and let it ride out, and before you know, you
right.
lost all your $2,000.
Fear of missing out.
Oh
You're
no.
gonna wake up a lot of mornings and you're gonna hear how a stock you was thinking about, a stock you heard of, skyrocketed. And you're gonna be like, ooh, okay, let me see if I can hurry up and catch some of that run. If you're hearing about it on the news, it's too late.
Too late. All right.
Right? Depression, you're going to lose. Let me just put it right there. You're going to lose. Okay. It happens. You can control how much you lose, but you're going to lose. And when you lose, you might feel depressed. Depression has, from the losing out, has, I'm not saying it's clinical depression or you need something like that, but what I'm saying is you're going to feel some emotion with losing. And depression can keep you from making money. Like I can be depressed and then my mindset is off. And I can start revenge trading, saying, man, this stock took all my money. I don't care what happened. I'm making my money back today. And I just start getting in trades, revenge, trying to get it back. And I just keep losing and I fall into a little deeper depression. And I'll be like, I'm quitting. I'm never trading again. This is a scam. Right. And then and over trading. Again, I have to start 2 trades is the perfect sweet spot for me. 20 trades. Ooh.
Right.
All right. So this is my daily routine. Again, I'm being redundant, but the technical term for it is fundamental analysis. That's when you're going through the news and you're finding out the economic calendar, you're finding out what's happening on different stocks. Technical analysis is when you're reading the charts, you're looking at the patterns. 3, your trading rules, setting trading rules for yourself, like how much am I willing to lose today? How much am I putting up in my overall account? Risk management means that I'm in this trade, but I'm not going to lose that amount. I'm setting stop losses, and self-control, which is the psychology of trading, is not falling for these things. Don't be in a trade hoping. Don't be greedy. Don't get in a trade because you're scared you're gonna miss out on the money like everybody else. That's trading is not hard. Trading is not hard. You can literally learn to trade in no time. The hardest part is you. That is the factor. And I'm not talking to you personally since you're, the one here, but I'm just saying, like, even to myself, I'm the hardest one to control. So how do you actually supplement or replace your income? So what you have to decide what your number is. So $200 a day is $1,000 a week, is 4,000 a month, is 48,000 a year. People are making $5,000 and $10,000 a day trading, but do you need that to make your goal?
Right.
Okay. Do you need to supplement? So you have to determine what your why is. And I did not want to open up this presentation with that because I hate going to presentations and they be like, you have to determine your why. I think like, oh, I hate it. Like, why y'all say that? But it's necessary for trading. So the economy is going certain ways, or if you're uncertain of your job, you need an emergency fund and you don't have one, you don't have enough saved up for retirement. Is your why that is just paying off debt, right? You like, I have this $20,000 debt or $18,000 debt, and my goal is just to trade to pay that off. So I got a monthly bill of $500, which means I need only $150 a week trading. And every week I'm gonna put that $150 to, and hopefully I did the math right, but I probably didn't. I think it's $125. But every week I just want $125 out the market so I can pay $500 at the end of the month. Is it a car payment? Is it vacation? Do you want self-care once a month? So your only goal for trading could be like, look, I want to go to this spa. It's gonna cost me $300 a month. Okay. Can you do that? Can you break $300 down? That was what, almost $75 weekly? Can you get in and out of a trade to do that? Does it have to be $10,000? Do you need $1 million? I'm not saying you won't get there, but what I'm saying is, trading can be used to do what it is that you need it to do. trading can supplement your income if depending on what your goals are. If your goals are realistic, you can make $1 million. You're gonna need some $1 million capital. Starting with $1,000, trying to make 50,000 out of 1,000 in one trade, you're gonna blow your account. But you might can turn 1,000 into 1,000, and then now you got 2,000, and you can flip that, right? All right. So many people have used trading to solve these issues, and we went over stock options and how we use the stock options and not just the, regular stocks to do this. All right. So this is more. We already talked about this. The perks for learning to read charts is that you can go from buying and selling regular stocks to options to crypto to futures and forex. Okay. So it's a great thing to learn. And then these are the various approaches to the market. If you're a day trader, a swing trader, you're at least holding overnight. It just means that you're in a trade overnight or more. Swing trading. Scalping.
I have a question.
Mhm.
My girlfriend wants to ask a question about Roth brokerage accounts. Just ask her. Go, baby.
Can you have more than one? Can you have a Roth account, brokerage account through Charles and another account
Yes. You mean through like another company or Charles as well?
through Charles as well?
Yeah, I have about 4 accounts at Charles.
Okay.
I have about 2 IRAs and then two regular brokerages accounts. And then thinking about opening up more. So if your family ever you find yourself where you come into some money and you want to open up a trust, you can actually manage trust funds there. If you have children that you're saving for, you can open up custodial accounts for the children and do that as well. So yes, you can, as long as Charles Schwab is okay with it. And again, I have multiple accounts, but yeah.
Thank you so much.
You're welcome. All right. So
you said something about a trust account. I know this is off topic, but I gotta ask since you just said it. Do you have to have an attorney open up a trust, or is it just recommended to have an attorney to open up a trust for you?
So trusts are complexes. The main thing that I would say you need an attorney for is the actual trust documents.
Okay.
All right. So I heard someone say they went online and did some. And I was going to check out that online site and see what it is. But for me, just to make sure I'm opening up the correct trust, because there's irrevocable trust and there's revocable trust. And then there's a huge tax implication that comes with it. So even between an attorney and a CPA, or if an attorney understands how to do both, like they do taxes as well, I personally, as an attorney, I would want that insight. But not legal advice. I always err on the side of getting an attorney because I understand what the implications of not getting one is. But
Don't get too far sidetracked. I forgot I was asked.
yeah, you're right. Some people might try it on their own. I know someone tried it on their own. I just don't know how it worked out. All right. So scalping. I scalp a lot. I scalp probably more than I day trade. I'm usually in a play for seconds or minutes, like quick. Like I don't have time to have my money out there lingering. So if you're in scalping means that you're only holding the trade for a couple of seconds or a couple of minutes. So for example, when we saw that long candle shoot up, and I said, if you got in this candle, I would not ride it all the way to the trend line.
Right.
That one candle was 5 minutes. You would have gotten in and out of the market in 5 minutes or less.
Do you scalp every day?
I sure do. Every day that I trade, but I don't trade every day.
I got you. You scalp every day, but you don't day trade every day.
Okay. So the market is open 5 days a week. I may trade 3.
Okay.
No matter what it is. Now, I guess I do trade every day because if I'm always in a swing trade, then I might be in a trade 7 days, 8 days, 9 days, but a trade is open.
So an active trade is happening, but you may not scalp every day. You may not day trade every day.
Correct.
I got you. Okay. But something's happening.
Right. But you need to look at the market every day.
Okay,
I don't care
regardless whether you're trading or not.
it's a part of your life. It's your best friend, whether you trade or not, you need to look at it.
What's an indicator that is a clear indicator to run? I know I said I did hear you say if earnings are coming out, you know, or whatever the case may be, run from that. Just sit your ass down somewhere. But if let's say earnings is not coming out, but that means earnings if it's coming, you said once a quarter, that is everybody's earnings on that same calendar, or every month it could
But that's
be.
the thing. Earnings can last. I feel like we just got through with one of the longest earnings seasons. So earnings is actually happening every week. But there's about 3 to 4 weeks in a quarter where the big companies are doing earnings. And when you can figure that out, honestly, that's probably when you need to take your vacations. Okay. The market is not moving for 2 to 3 weeks. You're gonna be like, Margie, you taught me the strategy and it works for a month. And now I can't make no money out the market. It's not moving. And I'm telling you, is it earnings season?
That's down somewhere.
Is it earnings season?
Yeah.
You're like, I forgot to check.
Wait a minute. But again, I'm going back to my question. So earnings season is is there earnings season for the NASDAQ and earnings season for the you know for S&P, or each company has its own earnings season?
Each company has its own season, but because the NASDAQ and the S&P has the top companies, these top heavy companies, they pile all of their earnings reports into about 3 weeks every quarter.
And in the quarter, each quarter.
In the quarter. And that's going to happen 4 times a year. So during those 2.5, 3 weeks, the market is just going to stall. And if it were me, I'm changing my approach. I know that earnings is approaching, so I'm going to say, okay, am I 2 weeks out from this earnings? And I'm probably going to look and see can I make a call or a put coming up to the earnings, sell my money and chill out. Because the second quarter, they actually come at some very good opportune times. It's a great time to take a summer vacation. It's a great time for a spring break. And a great time to just say, well, when am I going to actually learn? Like, you can be strategic about those times and actually just say, okay, I'll keep up with the news. I'll keep up with what's going on, but I'm going to study. I'm gonna hone in on like learning more about charts. Like I'm honing in on reading this book, like on trading, right? You're gonna have to be a forever learner.
No, that's what's up.
All right. So leaps. So man, this is actually a money maker. So people actually lose more money day trading. Some of the greatest traders I know buy option contracts with at least a year to 2 years out. And I'm telling you, that slow burn is where it's at. Now, DCAing is something called buying and holding. It's dollar cost averaging. That's what DCA stands for. And that's more if you're buying individual stocks. That means that you're just setting a certain amount, especially if you're trying to build your retirement for yourself. Like if you're worried that I don't have enough saved for retirement, so I want to start building some individual stocks real slow to live off. Dollar cost averaging is it. So for me, I may say that, all right, every week, I'm going to buy $100. I am over a period of time, I'm going to put an average of $100 in the stock market to buy this share of stocks. And I'm going to hold it over a long period of time. So that's a different aspect than like trading, but it's also good to know because we talked about various accounts. We talked about buying, the difference between buying stocks and options, right? When you're trading stocks and an investor. So wait, don't people lose hundreds of thousands of dollars trading? We already went over a lot of this about how not to lose money. Okay. We talked about all of this.
Mm-hmm.
All right. Here's what I want to hone in on. Stay in your practice account. All right. You can learn without losing a lot learning. Okay. We don't call it losing. We call it lessons. You took a lesson. Mm-hmm. Set low realistic goals.
That we call it a lash. You get a lash.
Get a trading coach or mentor.
Mm-hmm.
Okay, buy time on your option contracts. It's going to be tempting to buy the same week expiration. Nothing's wrong with that. You just need to make sure that it's going to play out. You're going to open and close that today. You need to be day trading. You don't need to be really swing trading something that's going to expire this week. Right now, if you're going to get out in 3 days, you might want to buy a contract that's 2 to 3 weeks out. You don't have to buy 5 months out unless you just really don't know what you're doing. Right. And you're like, I just want to be safe. And then plan your trades. And again, if I wasn't clear, stay in your practice account. And in case I wasn't clear,
Stay in practice.
until you have learned and mastered your strategy. And remember, today was just the beginning. You must continue to learn. Invest in mentorship. I'm here. I'm actually thinking about doing a group session starting in October.
Okay.
All right, my price point right now, I'm looking anywhere between $1,500.
Okay.
All right.
Is that for the month?
Hmm?
Is that for the month or for that one day? Is it the group?
The
Help me
group
understand what is it? What is it? What all does it include?
for about 4 weeks.
Okay.
All right, but we talked a little bit before, but for about 4 weeks, I'm going to teach you how to trade, but it's going to be in a group setting.
Okay.
All right, so where it'll be more than one person. We'll go over what we talked about today, but more in depth. Okay, with group settings, because it's so much of us, I will likely have some pre-recorded work. So it will be more similar to the tutorial I sent out to you in your email about how to open the Charles Schwab account. And I'm walking you through the entire application process to get set up. So like little things like that you can kind of do for pre-work, I would pre-record it.
Mhm.
And then we'd come to class. We would get into the market when it's live. We would, in a group setting, have access to a group chat. But within 4 weeks, and if we have to take a little bit more time, it will look like every Sunday for sure, we're having a call. We're having a live call to ask questions, and we're planning out the market together for the week. We're going over some of the same strategies I talked about. You're going to see how I approach the news. You're going to see how I break down every week of trading. You're going to see what days of the week I trade, what days I don't. There's every single week, there's a certain day I do not trade because I figured out that ain't a day that nobody should be trading. All right, I'm going to tell you how,
There's a day of the week that nobody's supposed to trade.
in my opinion.
Okay, I got you. A Friday, the day that it close.
No,
Oh, okay.
Fridays is a okay day. Fridays is a hit and miss. It's
Mhm.
about 50% chance if I'm gonna trade on a Fridays, but Fridays can be good or they can be bad, but I at least look at it. I approach a Friday to see if I'm gonna take a trade.
Okay.
All right. So there's days when I know I'm gonna go in and without a question, I can wrap up my trading plan in my week in about 2 days and be done. Now, again, even on that day that I said nobody probably should be trading, I can still show you, all right, if you're going to trade, here's what you should probably do. I'm not doing it. I'll be chilling. But if you want to trade on this day, then you can trade.
Gamble on that day. Go ahead.
What'd you say?
Hit the casino. You go right ahead.
No, I mean, I would give you the best strategy. We're going to
No, what I'm saying is if you decide to get in the market, I call it the casino. If you want to go ahead and you want to hit the slots, you go right ahead. But I'm sitting over here chilling.
So another perk for me is when I teach my students how to trade, it's an easy transition into futures.
Okay.
So if you think you want to trade options and trade futures, the way I teach, when you're done, you'll have no problem. The only thing you need to do is just set up an account. So the brokerage account we set up today with Charles Schwab is not one I recommend to trade futures. And remember, brokers are just place for you to put your money so that you can enter and exit the market. Questions?
I think you kind of answered the question specifically about kind of next steps, which, I know kind of what I need to do starting like tomorrow, right? Is, start practice. It's really developing good trading habits and studying and studying those websites you talked about. And then even just looking at the market, getting my account set up, and putting it on, I guess, practice mode or simulation mode. And just seeing if I can, look at some of those patterns, go back over the video that we just kind of went over today, and skip around to the things that I think I may need. And I'm sure I'm not, I know I'm going to have questions. This is not enough for you to, um, it's not enough for you to be to feel confident in putting your money in the market without having, getting some type of expert advice. So, going into October with that group, with the group experience, I would feel very comfortable being able to do that, and then see what other people are doing too. So, most likely my lady and I will be doing it together. So we can kind of like, play off of each other and keep each other accountable. And it's really, honestly, it's I'm not going to call it a retirement plan. I don't ever plan on retiring. I'm going to call it a lifestyle plan. Um, so as I'm already a nomad, and I am leading her towards a nomadic lifestyle, where when you're living outside of the United States, you don't need a whole lot of money. A couple hundred a day, $300 a day, you're living well. Um, I've had to stay in the United States to be a little bit different, but that's the game plan. So, now that my kids are settled and that type of thing, we're making our exit strategy sometime next year. And I would love for this to be our lifestyle plan where we get up in the mornings, we drink our tea, we watch the markets, we make a trade, and we've made money for the day. You know what I mean? She's a very successful therapist, and clinical sexologist. So she does well with that, but I mean, that still takes up more of your day, right? Having to see clients and that type of thing. And so I'm very excited about being able to take the next year and learn and practice so that when we do make that leap, she doesn't have to fill her calendar. I don't have to take on, clients and fly to the United States to do photo shoots and video shoots and things like that. Then we could make our money over the course of a couple of days and, figure out what we want to do with the rest of our lives together,
Wow, that's awesome. I mean, it's exciting. And I mean, I admire you a lot. I've seen you and definitely watched you on Facebook over some years now. And so I do, I'm just fascinated about your nomad life. Definitely one of my dreams. So, um, how do you feel about class today and how things were presented? Do you feel that you actually learned something or learn a little, learn a lot, or?
Yeah, man, yeah, man. So here's the thing. As I said to you before, one, I shot behind the scenes. I shot coursework for like your, but it's different when you're in the mindset of getting into the market yourself. Some of the things I've heard before, some of the things some of you heard, but you had no context, and you did an amazing job of breaking it down. And it was a whole bunch of and oh, and there's one more thing. Oh, and there's one more thing. And so we, she and I experienced through another course that we had purchased, and it just wasn't a great experience. And so I feel like if this is even so, I will tell you, even leading up to today, from the reminders to sending, even if we didn't personally do our work, you did your work, right? It was an indicator to let me know that, if I want to make an investment in you, in your expertise and your experiences. I think you had some bad experiences too, giving us what you wish you would have had, right? And so I'm excited to be able to give a testimonial, and I will. I will do a testimonial for just tell you something else. I have children. I want them to learn this, right?
I'm sorry, you broke up. You said you would do a testimonial for what now?
For you, for this,
Oh,
just for this class, right?
great.
I think I would recommend class again that you would get as many testimonies as you possibly can, because social proof is everything, right? So sure, you post on social media that you had made some money or whatever the case may be, and that's what gets everybody's attention, right? But then when it's time to, what about you decide to turn this into a digital course, which you should, and people are coming to buy it. There's nothing more than having Black people or 20 people in general, it doesn't matter what color the ethnicity is, saying that it was an amazing course. Right? It broke it down. I have a basic understanding. Are you ready to trade yet? Probably not. But this is where maybe maybe a 3 or 4 part course would video would come into play that would get them ready to be able to make their first trade. When you get done with this thing, you should be ready to make your first live trade, type of thing. So if you're going down that path, that's something obviously I can help you with. I've done tons of them. You know what I mean? So anyway, but no, I would definitely do a testimonial and just talk about my experience and our experience, if you will, and go from there. Let me know what